Okay, let's jump into our deep dive on Tempus AI, ticker TEM. Now, if you're trying to get your head around this stock, it's a real puzzle.
It's a total dichotomy. Yeah.
On one side, you have this huge promise, right? The exponential scale of a software data play in healthcare.
But on the other, it's still kind of burdened by the high costs and, the volatility of a traditional services company.
Exactly. So that's our mission today. We have to figure out if all this market noise is an opportunity or if it's really a warning sign.
And our sources are leaning toward, well, extreme caution is the phrase that keeps coming up, even with the long-term potential.
Okay, so let's unpack that. Why are we even talking about Tempus like a pure play tech stock? I mean, isn't it basically a very sophisticated diagnostics lab, sort of like a Quest?
That's the key question.
Yeah.
And the answer is that diagnostic testing, things like their XT CDX panel, that's really just a mechanism.
A mechanism for what?
For data ingestion. The margins on those tests are, maybe 40%. Their main purpose isn't profit. It's to get the sample and, critically, to embed Tempus right into the doctor's workflow.
Interesting. So it's the most expensive, lowest margin way to get the unique data they need for their real business.
That's it, exactly. The true profit engine is the data services segment. That's where you see the high margins, 60 to 70%.
Right. And this is where they're licensing out all that structured multimodal data to pharma companies.
You match the genomic data with the deep clinical history. That's the proof point that justifies the premium valuation. You see it in big deals, like that $200 million agreement with AstraZeneca.
Okay, but the end of 2025 was really tough on the stock. It felt like a perfect storm of risks that just hammered investor confidence.
It was a convergence for sure.
What do you think hit the market hardest, psychologically?
I think it started with the insider selling. You saw the CEO, Eric Lefkowski, just dumping stock. Something like $10.6 million in December 2025 alone. And even if it's a prearranged plan, the market sees that and immediately thinks management is setting a ceiling on the price.
It sends the signal, this is as good as it gets for me, which is never what you want to see.
Never.
And then you layer on this huge patent lawsuit from Guardant Health. Is this fight over the XF liquid biopsy assay, is it truly an existential threat?
Yeah.
Or just, industry noise?
I'd say it's much more than noise. The XF liquid biopsy is absolutely central to their immediate growth story.
So any kind of injunction there would be.
It would be highly detrimental. You're hitting the fastest growing part of the entire business. Then you add the Spruce Point short report on top of that.
Right, the one that accused them of AI washing and some aggressive revenue recognition.
Yeah, and that caused an immediate 19% drop. It just poured fuel on the short thesis fire.
So let's look ahead to 2026. What's the biggest headwind facing Tempus and its hospital customers?
It's coming straight from CMS, the Centers for Medicare and Medicaid Services. The 2026 physician fee schedule. It includes an estimated 11% decrease in reimbursement for oncology services in facility settings.
An 11% decrease, that's huge. That puts direct pressure on their main customers.
Exactly. Hospitals will have to scrutinize every cost, potentially consolidate vendors. It's a tough environment.
That sounds brutal. But on the flip side, there's a potential saving grace, right? This whole boom around what people are calling agentic AI.
It's absolutely the tailwind. We're moving way beyond simple chatbots. We're talking about AI agents that can execute complex R&D tasks, like designing entire clinical trials.
And that means a massive surge in pharma R&D spending.
Which flows directly to Tempus's high-margin data and services segment. They have the clean, structured data everyone needs to train these new AI agents.
Okay, so let's put it all together for you. What does this all mean right now? Analysts are generally forecasting a pretty high upside. The consensus is, what, around $90 to $96?
Yeah, but despite that long-term optimism, the professional recommendation is overwhelmingly hold. Or maybe even just wait.
So what are the critical factors you need to be watching?
Two things. First, that Guardant lawsuit docket. You have to watch if it moves toward a settlement or if it escalates.
And second,
the gross margins. Watch the data segment specifically. If those margins can reliably trend up towards 65% in 2026, then it finally validates the whole software company thesis.
All right, so a final thought for you to explore on your own. Tempus's core data asset, we're talking over 400 petabytes of this unique clinical and genomic data, is arguably irreplaceable.
It's a massive moat.
So the question you should be asking yourself isn't whether they're building the future of healthcare. The question is whether all these structural risks coming in 2026 mean the potential reward is really worth the high volatility you'll have to endure today.